It's time now for business. Let's say hello to Kate Moody. Kate, after the violence at the U.S. Capitol and a U.S. president that still refuses to condemn it, social media is now banning Donald Trump or suspending his accounts at least for some 2 weeks' time.
Yeah, Facebook is laying the hardest line here, Francois. Facebook, along with its site Instagram, Twitter, YouTube, had on Wednesday evening removed some of the president's posts and videos saying that they were violating their user terms by questioning the results of the election and inciting violence. Now, the 12-hour block on his Twitter account has now come to an end, although the outgoing president has not yet tweeted today. Facebook, though, has now said that he will be blocked from its sites indefinitely. CEO Mark Zuckerberg writing that the president had used the platform to condone rather than condemn the violent actions of his supporters, and that he was trying to undermine the transition to the Biden administration. Zuckerberg writing, "We believe the risks of allowing the president to continue to use our service during this 2-week period are simply too great. We are extending the block we've placed on his Facebook and Instagram accounts indefinitely and at least for the next 2 weeks." Now, Facebook and Twitter have in the past faced criticism for allowing the president to continue posting false or violent claims on their sites despite their user restrictions. They said that the public at that point needed to know what the president was writing. Only in recent months they really started flagging those posts that are factually incorrect. That immunity, we know, will almost certainly expire once he does leave office, but questions about the role and responsibility of social media and tech giants are only going to increase. Even if these market leaders do start cracking down, we know that competitors are already springing up and attracting many of the far-right users who have been flagged or blocked from other platforms. Many of those sites were abuzz yesterday with calls for an armed revolution in Washington. A platform that's called Parler describes itself as the world's town square with a focus on free speech without fear of being deplatformed for your views. That's on the front page of this site. Along with applications like Gab and MeWe, they are seeing a spike in user numbers across the United States, much of that content focusing on false claims and conspiracy theories. And so this is really going to lead to a bigger problem here when it comes to regulation and balancing the oversight of online content with freedom of expression.
All right. Meanwhile, in the U.S., the number of those applying for unemployment benefits remaining high.
Yeah, Francois, lest we forget that millions of people have been put out of work over the last year by the coronavirus pandemic. For last week, the week ending in January 2nd, 787,000 new applications for unemployment benefits were recorded across the country. It's still well above that pre-pandemic record, relatively steady since a sharper drop that we saw over the summer. New data yesterday showed that hiring in the private sector had slowed down, contracting in December for the first time since April. Just over 19 million Americans are still claiming unemployment benefits. Now, that does include the self-employed and gig economy workers who had risked losing that financial support altogether. They are now still protected by the 11th hour deal that was agreed by Congress just before Christmas and signed by Donald Trump on December the 29th. Among other measures, that includes an additional $300 per week for people who've been put out of work by the pandemic. More aid for businesses and households is expected in the coming weeks. We know that the Biden administration is already putting together its list of priorities for another relief bill, and that will likely be approved now by what we now know will be a Democratic-controlled House and Senate.
And therefore, how are the markets reacting?
Well, Francois, U.S. investors really much more focused on this prospect of a Democratic Congress and the prospect of more stimulus than they are on the chaos that we saw on Capitol Hill yesterday. The Dow Jones has rallied about 200 points, the Nasdaq rising over 2% to top 13,000 for the first time. Among the biggest performers of the day, shares of Tesla have surged 6%, and that's pushed up the personal wealth of its founder and CEO, Elon Musk. He has now overtaken Amazon's Jeff Bezos as the richest person person in the world with a net worth of $185 billion. Earlier, the major European indices closed higher as well. The CAC 40 and DAX each ending up more than half a percentage point in the green. Economic sentiment in the Eurozone did rise in December despite these new lockdowns that we've seen across the bloc, but inflation does remain negative, minus 0.3%. That's according to new data that was released today by the European Commission.
Kate Moody, and we'll have the closing word on Wall Street later on. Many thanks for that update.